Hey everybody, we are going to look at some dividend stocks today. Tyler and I will both be looking at two dividend stocks that both start with the letter E to kind of tease out what we might be talking about. But before we get into them, please take a minute, click subscribe to my channel if you don't already. Check out the link you see on your screen from our sponsor, The Motley Fool. It's the best way to support this work we're doing and can get the top 10 stocks to buy right now. So, Tyler, with that in mind, what letter E stock is on your name or your mind right now?
Yeah, so the one that's I've owned this one for a very, very long time, and it's from a total returns from a dividend that it pays. It's been a fantastic investment for me. It's Enterprise Products Partners, ticker symbol EPD. They are a ga natural gas liquids and crude oil infrastructure company. So the pipelines, the storage tanks, the petrochemical processing facilities, the gathering pipelines that bring stuff from the wellhead to the large, interstate pipelines and things like that. Basically, anything that involves moving or storing product before somebody uses it is the parts of the business Enterprise Products Partners takes. Um, I don't want to lean too much on the, oh, it's based on volume and it only takes a fee, because yes, it does, but there's a lot of companies in this industry that do that, but somehow are not able to, maintain the discipline to, you know, keep a growing dividend going for 25 years. And that's what Enterprise Products Partners has done. This year marks the 25th year of consecutive dividend increase or distribution increases. Excuse me. They're a master limited partnership. It's slightly different from a tax perspective, but that what really stands out for them to me is just they've been a very disciplined management team, and you can see it in everything that they do. Their debt or their leverage or how much debt they take on relative to how much they earn has always been some of the lowest metrics in the entire among all of its peers. It's payout of how much it brings in each quarter relative to how much it pays out is again some of the most conservative in the industry, allowing them to reinvest in some of the business. And so it's just been a story of eh, you could talk yourself into almost any one of the pipeline infrastructure companies in this industry because of the kind of the fundamentals of the business. But if you look at the long-term returns of this industry, Enterprise Products Partners has shown the brightest because of management and the way that they are been good stewards of shareholder capital. It's one of my favorite terms. I'm sure we could make a drinking game if we keep doing this video series long enough. And at the same time, today, I believe that their dividend yield or distribution yield is somewhere around like 7.5%. A very attractive dividend or a payout that's it's not going to grow much, maybe like 2-3% annually, but 7.5% yield with a 3% annual growth, that's like a 10% return, which in almost any environment is good. Like again, you're not shooting the lights out, you're not chasing the hottest stock in the world, but if I can get 10% for 25 more years, I'm going to be incredibly happy.
Yeah, for sure. My favorite E stock right now, and it's a very powerful dividend stock, not the highest paying one in the market, is Extra Space Storage. Ticker symbol is EXR. Um, I'll be perfectly honest. My favorite self storage company up until about a year ago was not Extra Space Storage. It was a competitor called Life Storage. Ticker symbol was LSI. I say was because Extra Space recently acquired Life Storage, creating the world's largest self storage company by in terms of number of properties. The title of biggest by revenue and market cap still goes to Public Storage, but Extra Space Storage now has a big scale advantage that it didn't have before, and has consistently been a great performer. If I were to ask you, Tyler, what was the best performing area of real estate over the past 20 years, you probably wouldn't guess self storage, but that's exactly what it has been.
I mean, I might have said industrial, but like you and I, we
You
do
might
this
have, because
for
you
we
know it
do this
well.
for our work.
Well, and I consider self storage to be kind of a close cousin of industrial real estate. Similarly, low construction costs. A lot of similar business dynamics. It doesn't take a ton of staff to manage the properties. Great economics. We were talking before this that Public Storage once said that their break even point was about 30%. Uh, I think Extra Space, because they have a little more leverage, it's something in the 40% range, but it's great economics to this business. They run with 94% occupancy right now, so that's a good bit of wiggle room. And speaking of that dividend, 4.3% dividend yield, they have increased the dividend more than 500% over the past decade, and steadily, not just like a one-time increase or anything like that. Um, they've produced class-leading 10-year total returns, beating Public Storage, beating CubeSmart, all their rivals. U-Haul is a publicly traded company as well that has a lot of self-storage. They have over 3,600 properties located throughout the United States, 2.5 million individual storage units at their properties. One thing I really like about them, as opposed to Public Storage, which admittedly has the better balance sheet, is that third-party management platform that they've really been leaning into. They have the biggest third-party manager of self-storage. I know in a recent video, Tyler just discussed a REIT manager. Same idea. It's a capital light way to make real estate income, essentially. They're managing these self-storage properties that they don't own, over almost 1,300 of them, and getting third-party management fees for their services by slapping the Extra Space logo on there and providing the management infrastructure. Really, very, like I said, capital light way to make money, and that's been the fastest growing part of the business. So that's one of the reasons I prefer Extra Space over Public Storage right now, which is a question I get all the time. And long term, I just love the tailwinds in the self storage space itself. Um, just fast or rewind about 20 years ago. In 2004, 5.5% of US households had a self storage unit at an external facility, meaning like not in their backyard. Now it's almost double that. 10.6% of US households have a storage facility. And that has steadily increased. That's not a COVID jump. That is a steady increase. People have a lot more stuff than they used to. Um, and the industry makeup is very still in the early stages of REIT consolidation. I know there are a lot of big, beautiful storage facilities that have brand names I've never heard of near me. About 64% of self storage properties are not owned by REITs, and 44% of self storage properties are what would be considered institutional grade properties that are not owned by REITs. A lot of room for acquisitions and consolidation in the industry. Extra Space is one of the companies that has been doing acquisitions very responsibly and accretively. It trades for a relatively high valuation for a REIT right now at about 18 times FFO, but I think it's worth every penny of that. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.